shows you that Beijing wants a bigger role in the global financial system, and gold and Hong Kong are going to be at the center of it. It's going to take a while. They just did the ribbon break, on this thing a few weeks ago.
Monaco 64, home of alternative economics and contrarian views. Well, today I have the pleasure of speaking with Peter Carlin. We've spoken a few times. Peter is the co-author of A Pocketbook of Gold with Jim Sinclair, a survival manual for monetary mayhem. And just wanted to let the viewers know, let you know that this book, of course, was published in 2010. It was only one edition, so it's really tough to find. And if you find it, it's hundreds of dollars. But now you can buy it for $25 on PDF. I'm going to put a link below in the description. And welcome back, Peter. Are we on the way to monetary mayhem?
I think we're in it. We're in the beginning stages of it right now. We've been dipping our toe in and out of the water over the past 20, 25 years, but now we're firmly entering the water, as the IMF used to say to people about convertibility after the war. Everyone's hanging around the pool. Some people are putting their toe in, but no one wants to jump. But now we're entering the point now where the true money, the gold and silver money, are on the high diving board and starting to bounce up and down on the springboard, seeing how elastic and how much height they can get. And I guess we just had an experience of that.
Yeah, and you told me you want to start out with silver, and you called it silver madness. And you're going to tell us what you think is really happening, or what has happened with silver?
Well, the first thing I want to say about the silver market now is the pullback probably, it wasn't as pronounced as many people, including myself, thought it would be. That was a shallow retracement. And I think on the upside, people should remember that has both good and bad aspects. We have all the energy built up from 2011, 2012, all the way through till about, 2023. That's giving us this firm upside. The laws of physics do apply. A bigger pullback probably would have given us a better shot at going something like 100 plus, and we may still get there. But in the short term, I think, it was a decent pullback, but history doesn't wait for anybody. That's the truth. And even the way the markets behave, going down, the false move, the reverse move to then later really move up higher, didn't happen on this term as big as I had expected, but still we came off. So there was some buying to be had on our way down below into the 40s. I think, what did we get down to? 46.50 or something?
I think just below 46, I think, but very briefly.
Yeah. So there's a lot of pent up buying there, because we've seen people, as we're seeing right now in real time, they're coming back. They are back.
We're talking on the 2nd of December, Tuesday. You might be watching this a day later, but silver is now at 58.12. It traded as low as 50.
Right on the COMEX opening too.
Sorry?
We're right on the COMEX opening as we speak.
Yeah, which is quite encouraging. The low was 56.57. Gold as well is now almost unchanged. So things are moving very quickly right now.
So we had this big hiatus on Friday, and there's been a lot of hype about it. And I think this kind of market that we have today is a better indicator of a move, consolidation, follow through, a move, consolidation, follow through, which is very good music to the bull's ears, rather than some kind of huge vertical move. But we heard, we saw what happened on Friday, and there's been a lot of theories about it, and we had a lot of rumors. JP Morgan's moving its whole desk to Singapore. Oh my God. We had oh my God, somebody missed a 400 what was it, 400 million ounce delivery. I mean, come on, let's everybody calm down. And then 12 hours later, that was 40 million ounces. So 10% of what the original rumor was, and all of this and all this and all this. And I don't really think that that's what's happened. I think the timing of it is what you have to look at. And I've always said, as I've said on your broadcasts before, be careful of the silver traders because they really know what they're doing. They're the best traders in the world because they have this market which is fairly liquid, but is still thin enough that they can gap it and move it up and move it down by backing off and pressing things and going with it. And even Warren Buffett was in the silver manipulation game a long time ago too. And so it's a perfect trader's vehicle. So the people who thought that this was some kind of a sovereign play, I think were misled because sovereigns don't have that huge an interest in silver from a trading perspective. They have none. Although I will admit that is beginning to change, especially as the United States only a couple of weeks ago has called silver a critical mineral now, which could lead to tariffs, could lead to shortages, could lead to impounding it within the US, not letting it out, could lead to all sorts of things. But what I think happened on Friday is a question of timing. And you can see out of our 252-day trading year, we picked the perfect day for this to happen. We were closed on Thursday. Everybody took the long weekend off. And the silver COT went and did what it loves to do. When the cat's away, the mice will play, and they played. And so they managed to get themselves in a situation where they knew they could push the market. And I think also that the ideas that, there was some kind of an outage aren't really that substantiated. But what is interesting to me is that how many people do you think weren't in the office on that day? On all these backline systems, server farms, and everything else they need to run it. I will bet you 2/3 to 3/4 of them weren't at work on Friday. And so they did something extreme. They pushed the market up and they watched it happen. And they set off the stops, except it blew up the machine this time temporarily. Now, as you know, and I know from the old days, if we had had an open outcry pit, none of this would have happened. None of this would have happened. The floor officials would have come in. They would have given everybody a 10-minute break, 15-minute break. They would have gone through rotation, first rotation, second rotation, looked at the rostrum, see what the depth of the order book was like, and they would have gradually reopened the market. But in the electronic multi-platform game that we live in now, it doesn't surprise me that this thing has happened, and it's probably likely to happen again. But what I see this as a great move from the gamma traders in the options pit. So most of the people who have butterflied their book off by selling out the money and taking in the upside wings and the downside for protection thought that they were going to get the theta, that they were going to get the time decay on Thursday, Friday, Saturday, and Sunday. And the pros said, yeah, okay, why don't you sell this thing off, sell vol at the money vol off all the way into the close on Wednesday, and we'll buy it. We'll take the hit for Thursday, and when Friday comes, we're going to push this thing, and you won't be able to cover. And we'll be able to ramp this thing, and we'll be able to get a lot of leverage by being long gamma at the money. And so that's what I actually think happened. The reason why I don't think it was some huge coverage problem and physical delivery problem is because we were up about 5.5% to 6%. If that kind of a massive delivery problem would happen, we would have been up 25%, especially in silver. So I don't really think that's what it is. But as you can see, we're following through really nicely. So I think this is a great trade from the pro options pit, who knew exactly what to do to get people in the market, get them selling volatility, and then work the market up. And of course, now long gamma, they're incrementally accumulating futures as we go high, as we're going up. And it's just worked out like a dream.
So they're basically trying to screw the people who were short volatility.
Got it. exactly. Anybody short the premium just had their head handed to them.
See,
So,
because I noticed as well, apparently, even this morning, someone told me that one of his friends who trades options said that they weren't listing the options. And I think they didn't list the options when they reopened on Friday. Is that true?
even better, even better, because you can be sure vol is pumped up now. And a lot of it's a typical options player for the uneducated, or the not the uneducated, but the ones who have an institutionalized manner of thinking. The math geeks will come in and they'll say, wow, let's start to move vol down on Wednesday, and then we can get all the time decay on a 4-day weekend. And the pros go, yeah, sure. And they'll even backride them and offer the at the money straddle down, and in the first month, first 2 months. And then at the end of the day, when it gets really close to closing on Wednesday, you'll see people are just dumping volatility and dumping volatility. And then they turn around, they use another broker or something, and they buy back. And then when everybody's away on Friday, they go, let's goose this thing. And they goosed it. To me, it's a goose.
Yeah.
It's not some massive delivery problem, but I don't want to discount the tightness in the market. The tightness is there, which is why it's a perfect environment to do it. You've got the best trading day of the year to do this on, the Thanksgiving Friday when everybody's out. And you've got a market that it is naturally tight. It is. And I don't want to discount that at all. So, I mean, quite honestly, if you were a bit mercenary, what would you have done on Wednesday? I would have been buying volatile at the money vol right into the close.
So before we proceed further with the interview, I just want to give a shout out to Dirty Man Safe. So with traditional safes, their so-called advantage is that criminals can't break into them. But Dirty Man Safe is different. Its advantage is that it's undetectable, so they can't even try to break into it. And that's only one of the many features of Dirty Man Safe. They provide 3 different sizes, and you can bury your gold coins, silver coins, bars, important documents, jewelry, and anything that's valuable for you. So yeah, Dirty Man Safe is affordable, convenient, provides you peace of mind, confidentiality, and sustainability. So if you want to find out more, there's a link below in the description. It will take you to a landing page. And if you use that link, you get 10% off if you were to decide to buy a Dirty Man Safe. And they ship it to Europe as well, not just the United States. I see. Do you want to look at the daily chart, or do you want to talk about the backwardation in Shanghai for silver?
Daily, just to have a quick look at what happened and see how much ground we made up.
Let's have the daily chart is sent me. There we go.
Yeah, so we're right in the channel. We're at the top of the channel. We've come off a little today. We're already that is not real time. That's about an hour old. So where are we now, Mario? Where are we up at?
Let me check. Hold on. We're at 58.17, the spot.
It's gonna be okay. So we're going up for another test at the top of the channel on that chart, on that daily. And who knows? We might go through this time. We're getting pretty close. And that channel has been with us for some time, and that's you can see how well the previous high lows, if you go back, let's say a month and a half, you'll see how the charting does work. They tell you the metals markets aren't technical. I don't believe it. So we're in good shape there, and we're going to probably have another run at the top there and see what happens. If we get through it, we could be into God knows what, no man's land, and we'll see. There's your triangle. Yep.
Yeah, that's great. A weekly chart. Yeah.
Yeah. So we're gapping up again.
Yeah.
It's getting tight out there. Silver is still undervalued from a fundamental sense, but then again, it was undervalued for 10 years also and didn't move much. So it's partially fundamentals. It's partially I believe that the designation of strategic mineral dealers, strategic mineral within the U.S. is part of the game that's being played too. So, we have that. One thing I would note is that for all the bullion dealers, remember when we talked about a month ago that everybody was out of stock, and I was saying, well, I'll bet they've got it, but they don't want to show it. If you go back to the guys that me and Sharps, Gold Investments, they're all fully stocked now, but the premiums are out of control. In London and in the West, people are trying. These guys are trying, and I don't want to. They have to make a living too. I suppose they had decades and decades of really bad business, but now, if you look at like the 1 ounce silver rounds and things like that, not the kilos, which are much tighter. They're talking about premiums that are looking upwards of 35-45%. And there are other places in other markets in the world where you can still get it for 5 and 6%, which is the normal spread. So I don't think that they took some big inventory delivery. I think they held off selling because they liked the view of the market. But they're back, and everybody's stocked again. So we'll see what the retail does. Silver is a great mix between industrial, retail, investment, and very professional traders. So it makes it quite the powder keg for excitement. So.
Yeah, Peter, I've been hearing from one of my friends, and he's got very good sources like in the Middle East that a lot of the central banks now are buying silver as well. And we saw Saudi Arabia buy SLV, I think, back in August. We're seeing Turkey buy silver. To me, that seems to be a game changer as well, because up until 9 months ago, people said, well, silver is underperforming gold because central banks don't buy it. What do you think about that?
I have no way of knowing. I would find it surprising that the Saudis would go into SLV. I thought they would be much more into physical. Maybe, I will say one thing, and I don't want to say this is true about SLV, right? But if I remember the prospectuses when I used to read them years ago, if you're a size player, you get to the front of the pecking order to take delivery from inventory.
Yeah, no, I know. I did read the story, and someone actually had the holdings, and it was there. Saudi Central Bank invests tens of millions in silver,
Right.
SLV. I think if they ask SLV to take delivery, they will get the silver. So it says here, Saudi Arabia Central Bank enters silver market buying 932,000 shares of the iShares Silver Trust. I think hopefully they'll start buying the real thing, even though I guess they will probably have it delivered. But for us retail, I don't recommend SLV.
No, neither do I. But they probably have an agreement with the custodian, or the custodians behind it. But the other thing, of course, that I would say too, which could explain it, and that could be part of it, is that if the Saudis are investing a couple $100 million, I mean, that's what they used to tip the shoe shine boy with. A couple $100 million is nothing for the Saudis. So,
No.
but it's a thin market too. So, it's one of those conundrums. If you lay into it too hard, you're going to get the thing to explode and you'll have defeated yourself.
Yeah. Do you think the fact that the US and even China as well have made silver now a critical mineral, that other countries are trying to get the silver before, like you said, the US puts controls on people buying silver?
I think that's the big fear. That's the really big issue. That's the big issue. If because then then the scramble is on, and as I'll bet a person that many people don't know of, I'll bet you remember him, Richard Russell. Which Richard Russell used to say, there's no fever like silver fever. When it hits, this thing could fly right off the handle. So if in fact people are getting concerned about this, and the more people delve into what's going on with the industrial applications, something that, quite honestly, I got tired of hearing of over the years. But, when the facts on the ground change, you better change your mind with it. Being a great trader isn't always about being right. It's about knowing when you're wrong and when to change your opinion. Otherwise you just marry the trade, and that's how people lose lots of money. I started investigating this about a week ago. What's really going on with physical demand for solar panels, physical demand for AI application, physical demand for all sorts of interconnectivity in the electrification world and the expansion of the electrification world that we're starting to move into now. And there's some pretty scary elements to it, and about the demand for silver, and it doesn't look like it's that easy to substitute. I don't know what's going to happen if nobody comes up with a substitution. Maybe there's one that's lurking out there in one of the other mineral parts of the world, but so far I can't see it. But the other thing I wanted to also bring up about what happened on the last week was when the exchange blew up. Remember, it was the whole exchange, not just silver. And also, copper started to show real strength over the past 3 weeks. So you can see the whole complex is moving up. The whole metals complex. Platinum, it's been a bit up, it's been a bit down, it's been late to the party, then it ran ahead, then it's coming back. So I always have I see a lot of spread trading going on. We're seeing a lot of people who are, pushing down on platinum to buy silver, then reversing out the trade. Seeing a lot of people who are pushing down on gold slightly to buy silver. Everybody knows the alpha is in the silver. And that's why people are running for it now.
Yeah. And for the last, right now, I think there still is a slight backwardation on the LBMA. But now you're starting to see, and I'm going to bring it up, backwardation in Shanghai. So do you want to talk about that?
Yeah. So there's the big backwardation move. And as you can see on that top line that runs all the way from December through to November, once we got out there, we started to really, really move quite sharply higher. And these kind of basis trades and, front to back backwardation on first line, second line futures, is where it shows up. And as you can see, it didn't last, but, that tells you where the pressure point is and what it needs to get back to. So those types of pressure situations don't last, but the difference is now is that, the smart people, when the backwardation takes off to the moon, they know the prompt is getting squeezed, so they're going to take advantage of that squeeze to actually sell front to back, sell the backwardation, start buying the backs if they actually believe in the rally, because, whether anybody believes it or not, spread trading is a big part of this game, and managing the curve is where the pros are also at. They're not just punting front month futures all day long, up down, up down. They're playing the curve, and of course the curve is where the swaps get laid off to by the banks. Now I know some of the months are not very liquid, but there's still a fair amount of cash market activity that people like to play cash futures arb. And that people like to, spread their futures physical risks. So, it will show up there. Again, the contrarian people who let the backwardation soar and then started to buy the backs by financing it by selling the front are going to really do well. Yeah. Spreads get out of line. They don't always stay out of line forever, but they do tell you something about the market. And I think what they're telling us here is that the market's tighter than people think. And then that goes back to the fundamentals, which I don't really pay too much attention to. But, if you look at industrial use of silver now, we're seeing that, it represents like a third of demand, where it used to be 10% 20 years ago. So something is changing. Something's changing in the market. But the big point I want to make about silver and physical silver, and why I think it's so great that people should take silver, and my hat is off to the stackers, that even though they had a tough run from 2011 for a decade, especially the people who got in and started stacking when gold started moving. Remember, a year or 2 years ago, gold started moving up sharply and silver was doing nothing. So the diff, the gold silver ratio, where did we go out to? 80, 85, 90, 120
100, over 100.
for 100. The people who had the guts to say, no way does silver get left behind in this. I take my hat off to them. They did the right thing. And they're getting paid today. They're
Yeah,
getting
I'm
paid.
gonna bring up, if you don't mind, the gold silver ratio chart here on my system, because it looks like it's breaking down. And you sent me something earlier in the week about the fact that in 2011 and also late 70s, early 80s,
Right.
silver, the bull market in precious metals really took off once silver starts
Correct.
taking off versus gold. So yeah, as we see here, we're at 72.65 now, and up until, I mean, early this in April this year, it was over 100, which is pretty, yeah, like you said, the people, the silver stackers, they're being rewarded now.
Absolutely. It always shows you. It's like when the voices get loud enough to say silver is dead, it's finished. We don't play this game. It's an industrial metal. It's not got a monetary application. Yeah, well, when gold's $4,000, its monetary application is retail. And anybody who believes that gold and silver don't move on retail, you know, I'm sorry, it does, because every corner of the world charges on the market. You know, when in the late 70s, early 80s, when the bull was coming to fruition, every corner of the world was going absolutely crazy with gold. Japan, Kuwait, Saudi, you name it. It was all over the place. As we saw just a few weeks ago, you wouldn't expect the Australians to become gold bugs, but they were lining up around the block in Sydney and in Melbourne for gold. But one thing I wanted to point out is that people believe, or were saying last week, which I don't agree with, that there was some huge, massive physical delivery problem. Whereas what I think is that there was a big short in the market, both outright and in vol terms, and they got squeezed. But in the future, I think what we're going to see is, and this goes right back to what Jim used to say, Jim Sinclair, the guy I wrote the book with, used to always say, is that if you want to know where the shortage is, it's in the ETFs. It's in the ETFs. And we always used to laugh. He used to tell me on the phone, he used to say, when the history is written about this era of gold and silver, the scams involved with ETFs will set your hair on fire. And I think that's the next big thing we're going to see. So I wouldn't look for like some kind of physical problem, LBMA, that could be that. I would look for an ETF that can't make good. The NAV runs out of control, and then you'll see they'll get shuttered in. I mean, I think we had one recently in the past couple of months in India, where they shut down an ETF because somebody went in and looked at it and just said that there's no way you have this amount of physical behind you. You've taken too much. And of course, back to the basic thesis that me and Jim always used to talk about. I refuse to believe, first of all, there's not that much physical metal in the world to meet the demands of these ETFs. Nobody can tell me that they've got all this stuff. They're buying swaps.
Yeah,
They're
so the
buying
ETFs are basically fractional reserve metal.
exactly. Yeah. And they're trying to make up for it with derivatives. Or, and the custodians also have sub-custodians. And you can't take this back to the metal itself. So if you want to see the next big squeeze, or the really big squeeze that's going to get us up towards $100, watch the ETF market when somebody says, hey, I've got $50 million worth of this stuff and I want to see delivery. And they go, sorry, we can only cash you out. And then you're going to see a problem because the contract will be novated, and then we're going to really take off. It can, failure to performance on contract could be the real squeeze.
Yeah, and that you mean like someone big, someone like financial institutions, because if I had 2,000 shares of the ETF, they wouldn't care.
Right.
Anyway, right? Yeah.
But how about a big fund?
Yeah.
How about a medium-sized fund who could
Yeah.
cause a disturbance? And also, not just that, if you had 50% in physical and 50% in the ETF, and you could explode the ETF by demanding delivery, well, the other 50% you have is going to go to the moon.
Yeah.
So,
And I think a lot of people are learning about that. And I've heard as well that, yeah, a lot of big investors are like aware now that the ETF is like fractional and they want the physical, and the bullion banks don't like that.
no, they don't. They don't. When you go into the bullion banks, if you go into some of the big banks and they've been charging you storage for 5 years, 10 years, and you say, well, look, I paid all these storage fees, but now I live in the countryside and I've got this $1 million safe. So why don't you just give me the bars? You wait and see how they react.
Well, Morgan Stanley got caught
They get
years ago. They didn't have that. They were charging storage and they didn't have anything. They paid millions in fines.
Yep, yep.
Yeah.
So yeah, be careful, everyone. But that's all I'll say.
Yeah. What
Eddie
about,
by name.
sorry, what about Hong? Do you want to talk a little bit about how China is going to use Hong Kong to be the
Right.
center of bullion dealing for the world and probably
Yeah.
upend the LBMA?
Huge news. Absolutely huge news. In the long term, earth shattering. After Hong Kong's kind of sad downturn over the past, 8, 9 years, they're bringing it back, and we got a new exchange opening up in Hong Kong under international law, international, accounting standards, with, fantastic, experience going back to a minimum of 150 years. And the exchange, there's a new exchange now that's being reformulated. The original exchange was opened in 1910. It's going to be open outcry. So, get down there, lease a seat, get your jacket on and hit the pit, brush up on your Cantonese. I'm sure English will be allowed in the pit.
100 at market. I know
Yeah.
the signals.
Yeah. Oh boy, I'll tell you, it would be nice. It would be nice. So, to go back to Jim, what Jim always used to say to me is, Pedro, the problem is China has a plan. We have nothing. We don't have a plan. He used to say this, 15, 20 years ago to me. And, he's got some people who really believe in that too. Anybody who follows the Colonel Douglas McGregor and his commentaries on the Ukraine war, used to say, there's no plan. There's no plan to execute. There's just ideas people throw out. So it seems like it has a mirror in military planning as well as financial planning. As you would say, we don't have a plan. Well, we've got derivatives. That's what we've got. We've got collateralized debt obligations to sell. Short-term thinking abhors a plan. Short-term thinking doesn't want a plan. Who gives a damn about 20 years in the future when you've got CDOs to sell this quarter, this month? And that's what you're seeing. You can see China moving slowly, step by step. Now, this is one of the first really big moves. We have a pipeline now coming from Shanghai to Hong Kong. So you can now be in the special administrative zone, which, you can fly in and out of as easy as any airport in the world, no visas, no this, no that, and it's going to be a custodial center. They've got one vault already set up. They're thinking about taking another one so that they can get delivery. And they're essentially what they're going to do is they're going to be the face of the Shanghai market. So, China's activating Hong Kong as its outward-facing financial center at a time when yuan trade and yuan loans are starting to grow. Yuan interest rates are what, 2.5%? And the country's suffering from deflation, which is horrible in one way, but it'll keep a lid on interest rates. Whereas here, we keep talking about longer rates, and it's not happening at all. If anything, rates are going up. over the next year. I know everybody in the market, every pro says we're going to lower rates and the 10-year is going to come back down to like 3. Well, I don't believe it's going to. And so, you've got Western legal system. The financial architecture is not CCP. It's, the same one that they used to have before. It's just they mothballed it and now it's open again. So between that and the custody that, the Chinese government can apply to the physical, the opening of the vaults and the repositories, it shows you that Beijing wants a bigger role in the global financial system, and gold and Hong Kong are going to be at the center of it. It's going to take a while. They just did the ribbon break, on this thing a few weeks ago. And what's more, for those who are interested in that type of market, is Swiss PAMP, P-A-M-P, probably the biggest refiner assayer. They just broke ground on new offices, and their staff is now 300% over what it was at this time last year. So the Swiss are going to be giving this their stamp of approval. And Heraeus is also on the exchange now. They've got a seat. They're going to participate. So, the Swiss stamp of approval is there. That's going to be incredible, because so many of the Swiss and British and American refiners have pulled out of the market years ago. Johnson Matthey went away. I can't remember who bought them. Someone in China, I think. Who was it? Valcombe, the big boy. Valcombe got taken over by an Indian group. But, the multilateral vaulting system, which Beijing is trying to set up, which is going to serve as a collateral mechanism, for trade balancing, is starting to have a front-facing place in Hong Kong.
You said that this is going to be the standard here, the kilo bar?
That's right. The contracts for kilos. So that tells you retail, but custodial will be probably for London good delivery. And people should remember too that just so people know, on with the change in the refining systems that have gone on, London good delivery, which used to be 23% from East Asia, from Asia, it is 67% Asian delivered now. A lot of Japanese, 11 refineries in Japan, 12 refineries in China, other refineries in India, although they've been well behind the game. So there is integration between the Shanghai Exchange and LBMA. These are not like the Great Wall of China that's dividing the world. The gold world plays to a different tune. It tries to avoid geopolitics, although even the Swiss are getting dragged into it now by Trump with the tariffs, because they turned around and they said, we want the usual thing, 35% tariffs, unless you come and open up a refining system in the U.S. The U.S. has no major league gold refiners anymore. I mean, I don't know what happened to them. Engelhard, I think, went out of business decades ago or something. There's other small ones, but not ones that are really significant. So they want the Swiss refiners and assayers to come in and open refineries there. And the U.S. government has been saying this, and the Swiss have said, yeah, well, we don't really have that much interest to it. That was 6 months ago, and about 2 weeks ago, they said, yes, we're looking into it because they're threatening UBS. Behind the scenes that they're threatening UBS. I'm almost positive of it. I mean, that's my conjecture.
Yeah.
But they've gone.
Maybe Trump has a plan vis-a-vis gold. He maybe they realize that they need to stop just selling paper and derivatives and do real gold.
Maybe, but the way they're strong arming people is pretty incredible. So they're strong arming the Swiss again, because what they're doing is they're turning around to them and saying, your biggest, Credit Suisse is gone. Goodbye. They are no more. They got a shotgun marriage with UBS. And now UBS, their entire business now outside of retail in Switzerland. Switzerland, with its population of, I don't know what, 7.5 million people, not going to be a big business, especially when everybody's banking with the cantonal banks. Their business is in high net worth money management in the United States. And you could tell that behind the scenes, they're just saying, you get your refiners over here, or we'll shut down UBS in the United States and you guys will have nothing. And all of a sudden, the Swiss have done a 180 and they said, oh, yeah, we're looking into it. But what they're really trying to do is pray that the problem goes away. So
yeah,
that's the politics of refining.
yeah. To wrap up, I wanted to touch upon something that you pointed out before we started, is the face of de-dollarization. And I guess that's got a lot to do with what's happening with the gold market migrating to the Far East. So I'm going to bring up a chart you sent me here from Tavi Costa, who I've actually had on the channel a few times.
Right.
So,
Great chart. Here you can see, what foreign central banks are moving towards. And that little circle on the right shows you that treasuries are, not really moving up much anymore, and gold is starting to break out to the upside. It's a long-term chart going all the way back to the 70s. So you can see the long-term momentum that's based there. And now also with the United States, trying to change its maturity description of what a treasury is going to be. I have no idea how long the 30-year treasury bond has to live, but I wouldn't be surprised if it got rolled down into the 10-year in the next few years and the 30-year just went off the board. I mean, the 30-year, I don't think the 30-year existed before 1975 or something. So maybe that's it. Maybe that's it for the long-term treasury market. And I don't know if they're planning to replace it like they think or do something with stable coins, but it's going to be tough. If you look at Tether, even Tether is moving into gold huge now. They've got more tonnage than some sovereign nations. So there's a lot to that. But the real change of de-dollarization that we're seeing now isn't just on this simple front, but the de-dollarization is the result of the sanctions. And when somebody writes the history of this stuff 50 or 100 years from now, like we've said before, this is going to be the biggest own goal anybody's ever seen. Because as that chart shows, the reserve status of Western debt is no longer considered neutral. And when that status changes to something that is, geopolitically impinged upon, you're talking about a significant amount of damage being done. And now with Brussels, and we're coming to a head on this Euroclear, 300 billion in Russian assets, and everybody's fighting over it. And Trump says he wants to get it into his hands to invest in Ukraine with Russia. And, the EU is trying to get it, and the Belgian government and the people who run Euroclear are like, oh my God, this is going to turn into a disaster. There's a big article in the FT about it that, that the people who run Euroclear are saying, don't do this because, if you do it, all the confidence will be lost in Europe as a financial center. And then, who in their right mind is going to trust assets that are based in the EU? And they needed to keep the war going because it's getting to the point now, it's so serious that if you don't have a war, you're not going to have an EU. This war with Ukraine is all the EU has anymore. Everything has been bet on this war, and they lost it, and they don't know what to do. So you take the money, you ruin the financial center. You try and keep this war perpetuating, it's going to turn into a nightmare. So I don't see how anybody in Brussels gets out of this. What do they say? What a tangled web we weave when we thought that sanctions would cause Russia to bleed.
Yeah, and the other thing, Peter, is that in the post-1971 world, we've had a system where people have confidence in government bonds, especially treasuries. But with the sanction regime and what they did to Russia's reserves, I think that's over now. And in like a multilateral world, the only thing that will do is physical allocated gold and silver. And I think that's what the price of gold and silver are telling us. Would you agree?
Absolutely. Absolutely. And that's why China's making the move now. Look at the
Wow.
timing. The
Yeah.
timing tells you everything.
Yeah.
They know right, it's not like they just came up with this plan. They've had this plan on the shelf
Yeah.
for 25 years. And now they said, now we're going to execute on this.
Do you remember, I think it was 2023, Xi Jinping went to the Kremlin to meet Putin and they were coming out and they said something, well, this is going to be the biggest change in the world in 100 years. Maybe this is what it is.
Oh yeah, they directly said that. And then you had the famous pose of Putin with the 400-ounce bar and then holding up that gold coin right when that speech was given after the meeting. It looks like it could be. I thought everybody had forgotten about
Yeah.
that, except as gold bugs.
Uh,
But it's America as a repository, um, you know, for as a custodial for sovereign wealth now is being called into question. That's a serious matter, a very serious matter, and you could always get away with it before because there was never any alternative. And gold is an alternative now, but if they can really do something with this gold-backed yuan and these vaults that are going to be opening up, and now it's become evident in the past few weeks that Saudi Arabia is going to be key to this. They're going to be a key depository, and very interestingly, we just got visa-free travel between Russia and Saudi Arabia for the first time ever, just a few days ago. And Russia is using China as a custodian, and they're going to use Saudi as a custodian for their gold, as well as this exchange in St. Petersburg, which just opened. So things are developing very quickly indeed.
Peter, it was great speaking with you, and we're going to keep an eye on things. It's going to be, I think it's going to be an interesting December for the precious metals. And yeah, thanks again.
Okay, nice one.